This conference will now be recorded.
Okay, good morning. This is Fari Hemsey. It's about 8:43 a.m. April 23rd. It's a Friday. Last Friday, as you know, was a market. I'm sorry, April expiration, and we're rolling into uh, May contracts. Of course, on the futures, we're still doing June. We'll change that uh, first week of June or about. As you know, so we got ways to go. We will remind you several times. Trust us. Okay. By the way, I need to have to report something. A quick flash here. A lot of sequels, but this is housekeeping. Notice we're on Excel, not Excel Plus. As of last night, we managed to post those charts in our area that we post our end of the day chart, which ends up to be end of the week as the week progresses. This area, there was a typo, we caught that, but if you go there, this was we were doing Excel Plus. Okay, we switched back to Excel. Why? Very technical, and you got to know a little bit about. I would say this in a classical term, I would call that price cycle studies, but this is more like block size. It's like volume block size studies in terms of their cycle. So it's a volume cycle. It's esoteric. No need to get into too much detail. Nor do I would go there myself. But I think that you would see this is far more intuitively helpful what we try to do if we sign Excel for now. Yeah, Excel Plus has just been not as fluid as it was before. Maybe into a run up. Maybe could be into this run up. Okay, into this latest new high. Let's go to calendar. Calendar. We have two items today. As you know, this is the third. This is technically third week for calendar. Okay, but for options, because that was a partial week in when April started. Friday was the second of the for non-farm payroll was the second of the month. As such, last Friday was options, and this is for that purpose for the market calendar. Today, this is the fourth for economic calendar, which is not market. The economic part is fourth. I'm sorry, third. It's third. So now we have the PMI. This is the third week of the economic calendar. And every once in a while this happens. Most of the time they're both the same. This is the number we're expecting at 9:45, 15 minutes after cash open. This is fairly in line. That means not much of a change. So if there's any surprise to the upside, I think we should be aware of it. We should be prepared for it. I think you're probably going to see it. Okay. Next, I think much bigger number. Where I come from, it's a school of hard knocks. Post '95, academics stopped and hard knocks started. I mean, seriously. I mean, I think it was '96. I don't know. '95, '96 was the last course at AGSM. After that was purely trading and research, and just that went on about 10 years, and I moved to Chicago because I felt I've exhausted what was in Chicago, in LA, in the West Coast. 775,887. So this is a decent rise in that annual rate. And somebody smoking something there that says 950. Now that could be because they think the treasuries are going to get better. Of course, they have gotten better from versus last month. And of course, yesterday and today, that's not a surprise. Hold on, where's my you? 1 second, guys. I'm missing something here. Yeah, there we go. No. Sorry, I'm trying to get to one of my charts for you. Can't get there. Oh, there we go. Overnight. Okay, what are we doing overnight? Overnight, we're doing. I just want to quickly 3.5 and 20. Yeah, let's pull it back. Anyhow, let's move on. Next week would be GDP. We want to look at. We want to be looking at. Let's see. LEI. New home sales are coming in now. Consumer sentiment should be coming in. We have to look at, and then we're gonna see what we got on FOMC. Okay, but not next week. So this weekend I will also update my calendar. The one I keep track of my own econ calendar because it's a little bit easier for me, especially for a long time. And also nobody's speaking. Thank God they've getting away from the soapbox. The buzz overnight is the 43% capital gains, and the fears. Listen, that's why we have so much debt. For a while they had it easy, so now pay something. See, I'm on 60-40 because of futures, a little different, but capital gains, yeah. And what are they going to say? No. Well, can they? We have to pay some of this debt down. So too many loopholes. We got to close some. Yeah. Anyhow. Now, 43 is a shock. Don't get me wrong. I'm not a Biden fan. So, hey, I warned you. So be careful. All right, let's go to the timing digest. Timing charts. By the way, timing digest, haven't heard anything back from them other than, yes, every time we change opinion, they get a copy just like you guys do. And they've confirmed it. They are keeping track of it. But I don't know when they're going to come back. And I hope it's not too long because some people may stop even dealing with them, and that's not bad. That's not good. You want to be robust. Okay. Outside bar. Boom. Boom. And this is interesting too. Two outside bars back to back. I got to go back and see how often this has happened. Probably write a code to chase it over the weekend, see how often this has happened. At all-time high. At all-time high, one outside bar, then another outside bar. Now, we're not down much. We're not up much. It's a 300. I think we were a little bit lower intraday around 2 in the morning, overnight, in the morning, and then 27, 29. Yeah, slightly, barely, okay, because the close was here. This is the close. No, let me close. Hold on. 50, 50, 60. Here's a legal close. Murray, that's not legal close. Hold on. You gotta go 15 minutes to see that. Hold on 1 second, guys. This is important. Let's get this right. Hold on. Okay, at 3:30, 6:15. Close on S&Ps. That's what matters here. Close on S&Ps were legal. Legal day was 41.29. 41.29. And we traded a couple of handles below. Why? The shock was huge. Already, a lot of people got out already. Look at the volume. Volume went nuts. So here's the. I suspect we're going to see a run up into the first hour, maybe top of the hour. Maybe the home sales going to be bad, or it could be one of these pundits keep talking. But somewhere after, in the middle of the second half of the, second 30 minutes half, 30 minutes, second half hour. I'm trying to say. I'm sorry. Second half hour. I'm sorry. I had to clear my throat. Between 10 o'clock to 10:30, I think I'll be on an extreme watch. If nothing happens, we should probably have an easy, normal day. Maybe edge up a little bit because of this push yesterday, and then also the double outside bars. But if something comes out in that time period, I think that should be high of the day for today, and it's going to be a pretty strong negative close, which would set us up for. I did some look at some numbers because I was talking to a couple of guys at West Coast last night on they're not professional traders, but they're fairly active, good sized portfolio, lots of experience. Individual traders, but semi full time traders. Week 3, if you look at the charts, the way we set up, I was doing it just on my cell phone actually. Week 3, let's go here. I know I'm speaking out of sequence, but this is crucial. When we're at all-time highs and we drop, if you look at it carefully, lots of times it's more than 1 week. And sometimes the count goes to 3 weeks. Okay. This is just week one. And this is an interesting pattern too. The failure, where it happened, we did not hit the new high. The new high has been 4 days back. When that happens, typically we have a second week, sometimes third week. So my normal expectancy is the next week is going to be also down. That's what I'm trying to get to. Normal should be also down. I'm not guarantee it. Not saying it will. Nobody can. If somebody's trying to guarantee a performance for you, don't walk, run. But that should be your expectations. Okay. Moving forward here. Okay. Came back on the McDonald's to 40 negative area and negative 51. These are below neutral. Just that, below neutral. Keyword is neutral. Yeah, they're below neutral. Breath is getting killed. Breath trust getting killed on NASDAQ, even though it's high up there. Imagine if this is just dropping. Okay. Imagine it tries to test the 50-day bar. Someone asked me a week ago, are you expecting 3,800? I wasn't then, and I'm not now. I'm expecting 50 bar. That seems to work a lot better than the Sigma levels, mainly because a lot of people don't run Sigma levels. Sometimes there's a coincide, they coincide, but a lot of people run 50 bar and 200 bar. This is 200 bar, this is 50. So right now they seem to be. If I hit this, that's 39.90. Okay, that confluence right there between the two says it's about 10. It's about 20 divided by 10, half 10. So this is saying 39.80. Let's say 4,000. So I'm expecting at least a psychological touch of 4,000 if we have a continuation. Today's crucial, and we may get bumped also mid next week if it gets pushed too far. It gets too far. Not Monday, I don't see it, but I'll see more like Wednesday as a potential first hour buyback. Why? It just we need a little bit more action on the downside to create that panic, and then becomes more excitable. Now remember, if we don't know if Biden can get this tax passed through. The president alone cannot pass taxes. That's not his job. That's not in the Constitution. And you can't do it with executive order. It's not going to happen with that either. It's a big road ahead, a lot of issues there. So, especially on the Republican side. But if that's looming, that's on the horizon, no prudent investor, and that's the test, will go in and buy now. I think the buying should be not dry up, but should be very, very selective. So the ones with a lot of profits, you got to dump them. Remember, he can also go retroactive, January 1st, because if he doesn't, once the detail comes out, I think that's what we should be expecting. This is not my idea. This is I heard this morning on CNBC. Yeah, they can play it with, retro. If they don't do retroactive, there'll be plenty of plans. 8 months left for people to finagle a lot of things and move things around. If you're in a bad, so last year was the worst deficit ever. Okay, in the area of zero inflation or near zero inflation. So you got to do something. You cannot continue going like this. This path is not unsustainable. As a developed society that's highly industrialized, it's just we cannot continue this. Yeah. Now, some probably have to do cut back on some certain things. I'm not doing a budget here. I'm not a social re-engineering here. That's not what I'm going to do. But I'm just saying is that the net is very bad. We got to fix it. Yeah. Biggest widest deficit ever last year, and this year doesn't look that better either. So we got to open the economy. So that's a long way from here. All right. We had initially a decent day on Russell. Look what happened. You see that reversal there? Yeah. So initially we went up a tad, and they sold it. Look where we closed. We went back to his 50-day. Okay. Let me open these up a tad, so you guys can get a little bit more, because we're getting now more granular view. There we go. All right. So again, near highs didn't go through. This is not getting close to near highs yet. So we're getting a discount there, right? That up here, 28. NQ was $280,000 notional. Now we're about 15. That's 150, 250. That's about $5,000 less. So it's like 275 now. Big deal. Still very, very expensive. What is this? Is that a? Well, that's a zero line. Okay. What do I have to report to you? I did midday. We have now we've clearly pulled back in Russell, just a smidge below 50-day. No signal here. It's too early. SP1 Momo. Okay. It's still in the channel. Hallelujah. Hallelujah. This thing is just amazing. This is like Tico. Amazes you at times. Okay. In the channel, did not violate +1 signal. Okay. And we're slightly negative below neutral, which is 0 on the Momo. Do we have divergence? I mean, you know, as Pope Catholic, I mean, look at this whole divergence in the direction. So something is brewing. We're still buy and buy. No signal yet. If we have a drop, this could change the signal. Would it change this signal? No. Way too early. If we hit 4,000 or below, this signal would change, and in a hurry. You know, remember this is geometry. It has to go there within a certain space. Otherwise, no. If we gradually keep moving up or sideways, you still don't have a sell sign. When you get a sell sign here, look how late we got it last time. But that because those 2 weeks were dramatic. This is COVID last year. That was absolutely COVID. Remember, we were up below here. We went long here. I mean, short there. We went short there, and it was very painful 2 or 3 days. Okay? I mean, all-time high, and you've gone short. And personally, I had a little bit more at stake. I put some extra stuff to work, and it just, I was going berserk for that 3 days. My sister called me to say that this is the biggest mistake of your life. I said, I know. Don't remind me. I know. Well, 3 weeks later, we have a different phone call. She doesn't want to talk about it. That's okay. But sometimes you have to hold on. If you believe in what you're trying to do, you have to hold on. Yeah. Sometimes short are purely rear view mirror. Hi, Jai. Welcome, sir. Purely rear view mirror. So that means the lag is huge. Everybody knows that. It's priced in. What are you doing here? Exactly is the question. Okay. This wall again. This little blip there is live. This is today. This is now. The numbers are still closed. You can see there's a change there, and those are 0, 0, 0s. Oh, this one's running too? Interesting. I don't think so. Hold on. Let me see. Yeah, this is not today. Yeah, that's 22. Yeah, these are two. Yeah, these are all 22. Yeah, only VIX runs this morning. I mean, each morning before pre-open. So, having said that, maybe these guys weren't that dumb anyway. Think about that. Maybe they weren't that dumb here anyway. Okay, in terms of holding to this bias that vol should be a little bit higher, a little bit higher. Remember, vol is a corner probability of a 1 year forward for an asset. That's definition of volatility. What you expect it to be, and so the move that we see gets priced in based on the forward price of, let's say, bid ask. That's a forward price by definition. It's not a fill. It's a forward price. That is daily. You take that and you extrapolate it to a formula to come up with a 1 year amount, and that's what we're looking at. So as it's rising, it has been rising at new highs, but now look, you're taking different terms. You know, what if this thing gets to 21 to 22 area? That's 4 sigma. We've been there. Look at this. That was 23.5. Yeah, then you're going to see a rollover of some length. So SQ. Were these guys correct? We don't know. The fund who told me Thursday will be a wild day, did they know it was going to happen? I don't know. Could have been a guess. But look where we are now. So now, where is that? If this is the low will be let's say 2 months from now. So let's go here. This is the kind of thing you should go through, just figuring out, messing around, see what's happened, what's possible, what's not. That was April 1st. So let's say we go to June 1st. That's here. This week, maybe. What's on the calendar there? Anything else? This is a contract expiration, 10 and 11th. We go to let's see, September contract. Interesting. Let me go back here. This is receding. Okay. All right. So did these guys do something? Well, this is observation. Somewhere in here, as we are rising, they're opening these positions, and the machine is computing every day and projecting it to us about an hour after the close. That's the value it gave us based on what they have. Obviously, this says no new push have been had on. And last night was a downtick. So this puts us in first week of June as a problem. Okay. Keep that in mind. Trend, doing a sell signal on both, but I'm not too crazy about trend. So if you gotta keep your bias. If your bias says you don't like trend, you just don't like trend. Don't go back when it shows you what you want to see. Yeah. Don't pull a Trump. Yeah. So just be cognizant of data. All right. Very weird. Before the close, I mentioned that, guys. I hope some of you heard me. I said, this is very weird what we're seeing happening here because, of course, this is unusual, highly unexpected reversal intraday. And you could see the shape of this, which is we just went to this spread because of the VIX expired day before yesterday. The April VIX, and now we're running May long and August short. It's negative 335, which means what? First of all, it's neutral there. The value itself, the absolute value, the amplitude, if you will, is in classical days, this would have been a near low. Okay? I'm sorry, this wouldn't have been. Would have been much higher. Would have been much higher near a low. So all other things being equal, and you could see here, even after this big drop yesterday, intraday, it was negative 3. If it gets to 0, that's the low. So I would keep watching this, seeing whether this comes back or not. Let's come back here. This was even lower, around 4,000 maybe. 4110 area. Okay, and what is this? 4110 area. Okay, that's a double bottom there. Fine. What was the value of spread? The spread was running 2.8. So still not falling back to it. It was normalized. But bottom line is, if this thing goes lower, we're rising. That's not what I want. I want to see a bottom. I want to see a flush somewhere. For that, this needs to rise. So we're looking for, if you're keeping track of it on yourself, I'm trying to help you. That is, you can set that up easily on the chart. It's just a simple arithmetic spread. Long one contract, short the other. And you'll be looking at like a -1 to 0. About -1 to 0. That means high up here. If we get high up to -1, -2 to 0, you should expect, because it's not always going to go 0. It won't. It won't go to, it could go +1. You don't know. Depends on severity and the reaction. I doubt we're going to see a +1 for a low. That we saw that during COVID time. But when things were really, really purely emotional and news driven, where charts meant nothing. You might as well just get rid of the charts. Treasuries. So down ticking here a little bit more. That's fine. Yeah, this basically tells me what this is trying to tell me. This. Transportation. Let's go to DT. This one. Yeah, this just says that we are hitting some speed bumps in the economy. And part of it is also, I think, people's expectation on the anti-vaccine types, or I mean, what I said, 1 in every 1,800 vaccines were thrown out, which is probably not bad, but still, this is precious commodity right now. And also, you've seen this past week, 60% of the appointments were no-shows. That should wake up people at the White House. And those are the econ circuits, circles or circuits, yeah. That's not good. 60% of appointments did not show up. I know there's a scare by Johnson & Johnson. Again, reminder, today we should be having a comment from them today. Make sure your news is on. For that matter, I gotta get what do you call it? I gotta get my news service back on here. Where's the laptop? Yeah. Long story short, so that could be midday, as Admiral suggested on Wednesday. Most expected midday. They don't play the game the others are almost forced to play, which is to come in and say, we don't know what the announcement is, and then half an hour before the close they pop. No, I think if we hear from them, will be early in the day, or at the right before the open type of a deal, so that it doesn't impact massive amount of trading. Okay, by definition. All right, so all right, good. Let's put this here. All right, now going forward, one more chart. I'm slowing down. I'm sorry. Yes, I need more coffee. Okay, let's see what we did here. Oh, finally. Oh, no, that's not much. Sorry. That's not enough. Hold on. I got too excited. Go to 125. Okay, let me come back here. Okay, there you go. All right. Let me close this. All right, there we go. A little bit more. Hold on. Sorry. Okay. Finally, we pulled down a tad. Okay, but that's nothing. I mean, we dropped more than that. Look at the market there. We have a lower top, and this just made a new high. So another divergence. You got it. But inverse. That's inverted divergence. The stock drops and this doesn't. So all I know is this. You saw what I said Wednesday. This is way too high. I don't think anything I've seen past 85, 87 area. So if I would, this 85, yeah, there we go. Even, I think this is 89 there. Yeah, hold on. So this is over 90. Maybe a couple of times I've seen over 90 in terms of a number. I'm talking about number of peaks. And it drops. Well, kiss that goodbye. We came down and went back up, and look where we are now, 96, 97s. Unbelievable. It can't go over 100. It won't. It's not like, because this is pure ratio. It's not like the SQ, where mathematically is designed a certain way, like 150 max, somewhere around here. There's 150. Okay, there we go, 150. And yet we had a 159.03 reading, and they have not changed that. 2 years later, they have not changed that. Coming on the third year. Yeah, it's coming on the third year. Come August, it will be 3 years as a max. If there was an error in the calculation, remember, this is a pure calculation, but very complex. Yeah. You don't want to look at the formulas. It's too much. Yeah. What they have to do. Yep. Anyhow, first time I looked at it during that testing phase, I got a headache. I got a smoke coming out of my ears. Yeah, but there's a couple of smart guys put that together out of the what's called the products division of SIBO. Admiral arranged for me to be one of the beta testers, but I was, between you and I, it was over my head. This wall stuff's not easy. All right. Overnight. What do we got overnight? All right. So that finishes our market timing segment here. Going to the next one. Next one is this is overnight. Calm here. Let's go to our 30, which we're used to. 30. All right, let's see. Boom. And notice I've connected two together. This is for interval. This is for symbol. These are going to be always same interval. So I'm looking at apples and apples. 30 minutes, very popular with the pros. Fairly quiet because of massive wall expansion here. Okay. Yeah, I just left you guys alone. Look what you guys did. Again, point of interest is going to be these dots. I've got a lot of feedback on the webinar, and I understand. Again, One more to recap on the archives. We began using Excel for now. We may change it again. We may go back to Excel Plus. We have our logic. We're going to explain that to you. We'll let you know. But we're data driven. We have to be. We have to be data driven. Okay. Science and data. Think of it those ways. Okay. Tico was a little bummed out about CL, but that's his domain. Aside from that, I had a tough last half an hour. That last half an hour was tough. One trade, I barely made money, but it was just, but yeah, then I went back and looked at the commissions. I said, what are you doing this for? So what kind of a day we're going to have? I don't know. Again, last item. I may not be around last couple hours a day because I have a appointment with my dermatologist. We'll see. I'm still trying to get away from that because of now, especially this. So I want to be around. We'll see how things go. Okay. Any questions for me? Thank you all for attending. Wishing you a good weekend. Rest up. If you think yesterday was challenging, wait until we'll move into if this continuation is observed into Monday and Tuesday. By my setup, I think I'm looking for Wednesday for this leg to firm up. Now, I've been wrong before, so don't go by what I say. Yeah, so watch the market carefully. Okay, see you on the other side, and good trading today. Closing the webinar now.